join me today. Okay, so it's another time with the enthusiastic tutor. Okay, just gonna let you do a thing. So, okay, yeah, we are good to go. So, it's gonna be a continuation. Um, last, it's gonna be a continuation of what we stopped. It's a teaching in series. We talked about a lot of things affecting how an entrepreneur can kick off or start up a business. A lot of things put into consideration for an entrepreneur to start. Okay, Mr. Julius, it's great to have you join us tonight. So tonight we're taking are what is referred to as business environment, and under this business environment we'll be looking at economic environment, technological environment, demographic forces, the cultural environment and environmental scanning. So with this being said, let me just adjust my mouse very quickly. There we go. So with this being said, let's just hop straight into it. So we have the introduction. Business organization operates in an economic environment with shapes, and in these shapes, there are activities. Now, a lot of activities comprises of variables which changes from time to time, you know, and are affected by government policies in the economy. So as a vital component in the macro economy, government exercises a significant degree of influence. And let's not forget, we talked about internal and external environment affecting business then. And one of the external environment that can affect business, we talked about government policies and decisions. So now speaking about business environment, we're looking deeply into that. So business activity not only is shaped by economic context in which it takes place, but helps to shape the context. Consequently, the success or otherwise the government's economic policy depends on some degree of reaction of both firm and the market now, which are affected by government decisions. Now, the economic influence operates at different levels, and this can affect either favorably or adversely. So that's just an introduction. So we are going straight into the main body now. So what is the concept of economic scarcity? Now, like politics, the term economics tend to be used in a variety of ways and contexts to describe certain aspects of human behavior, ranging from activities such as producing, distributing, consuming, to the idea of frugality in the use of resources. Frugality in the sense that you are being um, you manage well resources when you tend not to give and when you give. Now, the modern definition stress how such behavior and institution in which takes place. Now, so what is economic scarcity? Now, economists' idea of scarcity centers on the relationship between the society's need and wants and the resources available to satisfy them. When we talk about scarcity, just like we all know in economics that human wants are insatiable. Human wants can never satisfy them. They are insatiable. So now the idea of scarcity centers on the relationship society needs and wants and the resources available to satisfy them. In essence, economists argue that whereas needs and wants tend to be unlimited, the resources which can be used to meet those needs and wants are finite, and accordingly, no society at any time has the capacity to provide all actual or potential requirements. So speaking about economic scarcity now, scarcity in the sense that economic has to do with the study of human behavior, in relation to their needs and wants. So now scarcity in the sense that they when we talk about scarcity, there's always need for resources to be used to meet up in satisfying some certain demand. But scarcity definitely can't simply means that human wants in an economy can never be satisfied. They are insatiable. There are a lot of them, and we have just little resources to use in achieving or maximizing in solving problem to a large extent. So we have that as that. So we have so sorry for the noise in the background. That's coming from the other flat. So now we have from a societal point of view, existence of economic scarcity poses three serious problems concerning use of resources. Now, from the problems scarcity poses concerning the use of resources, we have what to use the available resources for. That is, what goods and services should be produced or not produced with the resources sometimes described as guns versus butter argument. Now, these available resources, which is actually limited, and wants are unlimited. These available resources, it is now the responsibility of the economists to determine what not to do and what to do with the limited resources. The second problem is that how best to use the resources. The first is how to use the available resources. Second is how best to use these resources. And third is the best way to distribute goods and services produced. So you see, it's not even enough to have the resources. It's not even enough um, on how to use the resources. You still have the issue of how to distribute the resources. So we have that as that. So we have talking about that now, we're able to talk about understanding the distinction in fundamental to the examination of the way which business is conducted and represented in foundation is much. Now talking about this in relating to this to business, even as a business person, you have have some limited resources, you understand, and you have it is your responsibility even as an entrepreneur to think about how to use this your limited resources to build your business, and not just that alone, how best to also use these resources to get what you want, and then how you can find your targeted audience and let them know here you are and you have the needs to their problem. So these three issues are what to use resources for, how best to use them, and even how to distribute these resources. So we have that as that. So we move next to uh, the centrally planned economy. Now, in this type of economic system, associated with the post, this economic system, the centrally planned economic system is associated with the post Second World War socialist economics of Eastern Europe, China, and so when we talk about now, let's take this down. Socialist economies, countries that practice socialist economy. We have during the Second World War, then we have the Eastern Europe, China, Cuba, and but these three particular countries were mentioned in the material. So most of the key decisions on productions are taken. Talking about the centrally planned economy now, most of the key decisions in economy is taken by the central planning authority, normally the state and its agencies. Under this arrangement, the state is typically responsible for owning, controlling the main economic resources, establishes priorities in the use of those resources, set out targets for business which are largely under state ownership or state control, discrete resources in an effort to achieve predetermined targets, seek to coordinate production in such a way to ensure consistency between output and input demand. That is that under centrally planned economy. So we have the fact that an economy is centrally planned does not necessarily imply that all economic decisions are taken at the central level. In many cases, decisions may be developed to subordinate agencies, including local communities and enterprises. So we have that as that. So now we talk about the free market economy. Talking about the free market economy is just the opposite of the centrally planned economy. The free market economy is more of capitalist, and while the centrally planned is more of socialist. And we said countries like Cuba, China and somewhere in the European states. Okay, we have the European, yeah, Eastern Europe, China and Cuba. They were the country that was during the post Second World War. They were actually running this system of centrally planned economy. So we have, just as against that, this is the socialist. So against that, we have the capitalist, which is the free market economy. So we have free market economy stands in direct contrast with the centrally planned system. You understand? So in the centrally planned system, the state controls most of the economic decision, while in the free market economy, the key economic agencies are private individuals, sometimes called household and firms, and these interact in free markets, though through a system of price to determine the allocation of resources. So the main determinant, let's not forget this, the main determinant in free market economy is what? Price. Now the key features of the types of economic system are as follows. Well, resources are in private ownership and individuals owning them are free to use them as they wish. Firms, also in private ownership, are equally able to make decisions. No blueprint, no master plan, exit or direct production and consumption. Decisions on resources allocations are a result of decentralized system of markets. The consumer is sovereign, dictates the pattern of supply and hence pattern of resource allocation. Here is more of the consumer than more of the states, which is in the centrally planned economic system. So we have that. So we have the macro levels of analysis. Macro levels of analysis. So we have economic is concerned with the study of how, talking about macro now, we have economic at large extent, but let's just break this down a bit. Economic is concerned with the study of how society deals with the problem of scarcity and the results the resultant problem of what to produce, and how to distribute. Within the frame within this broad framework, economists typically distinguish two types of analysis. The micro and we have the macro. Talking about micro is niching down. Talking about macro is expanding. Let's add this at the back of our mind. We want to talk about micro, like microchip is niching, like slimming something down. We want to talk about macro now. Macro is the economy at large, talking about something expanding. So now microanalysis, which is concerned with the study of economic decision by both individuals and firms, while macro is concerned with interaction in the economic as a whole. I think in second semester of 100 level, you get to know more of, I think it will be treated on its own as the main topic, macro and microeconomy. So, but for now, I believe we know what they mean and what they stand for. So we have so sectors of economic are interrelated to some degrees, which is very certain. Now we have what we call the flows of economic activities. If, okay, I think I need to close that. We have what we call flows of economic activities. Economic activity can be portrayed as a flow of economic resources into firms, productive organization. Economic activity can be portrayed. So when we say economic activity is referred to as what we call flow of economic resources. Now, which are used to produce output for consumption. This flow of economic resources to firm are used in the production of output for consumption and corresponding of flow payment from firm to the provider of these resources to who use them primarily to purchase goods and services. Now, this flow of income and expenditure continually represent the fundamental activities of government of the economic at work. So just looking at it now, resources come into an organization and the organization produces. They produce, they give out. And while they receive, they also pay their suppliers. So that is what the cycle is all about. It comes, it goes out, it's being consumed, it comes back, it goes out and it's being consumed. That's what basically the flow, which is the activity of economy. So we have that as that. Okay, you can just move to the next topic here. So we have what we call change in economic activities. Now, the level of spending by consumers on goods and services produced by indigenous firms is influenced by varieties of factors. What are the factors that influences the level of um, level of spending by consumers? So we have, let's take for a start, tax on income earned, which has the effect of reducing the level of income availability. Tax has the ability to excuse me excuse me tax has influence or tax has a great influence on changing the capacity of income spent on purchase by customers. So we have which has the effect of reducing the level of income availability for consumers. Now, added to this, some customers prefer to save, not to spend. A proportion, a proportion of their income or to spend it on important products. Now, let's take this for example. Now, circumstances such as this represent that economists call a leakage or withdrawal from the circular flow of income and help to explain why revenue businesses. Okay, now when a consumer choose not to spend and choose whether to save instead of spending based on the tax, you know, probably because the tax is the tax is much. So if this is referred to as leakage or withdrawal, when a consumer when a consumer decide to save, the proportion of their income and not to spend it, maybe as maybe it was influenced by tax. So this is referred to as leakage or withdrawal. So now at the same time, this leakage are occurring, the additional form of spending in the economy are helping to boost potential income of domestic savings. Now, as excuse me, excuse me, sorry about that. So we have just that point taken down. So we just move to the next thing here. Now, multiple increases in economy and consumption can also give rise to accelerator effect, which in turn is used to describe a change in investment spending by firm as a result of change in consumer spending. Now, I will talk about effect in consumers' capacity in spending. All this has to do basically with the business environment, and this basically boils down to the tax. Now we have government and macro objectives. So we have, notwithstanding the complexity of real economy, the link between business activities and spending is clear to see. This spending, as indicated above, comes from consumers, firms, government, and external resources, and external sources are collectively can be said to represent total demand in the economy for goods. Economics frequently indicate this by following the notion of aggregate monetary demand. Now, when we talk about the economic as a whole, we talk about the economy as a whole. Now, spending indicates that consumers, firms, government, and external resources are collectively said to represent the total demand of the economy for goods and services. Now, based on this, economists work on a notion called aggregate monetary demand, AMD. Now, this AMD is what we refer to as consumer spending plus investment plus government spending plus export spending minus imports spending. So AMD now is equals to C plus I plus G plus X minus M. So AMD now referred to as consumer spending plus investment spending plus government spending plus export spending minus import spending. Within this equation, consumer spending is regarded as by far the most important factor in determining the level of total demand. While economists might disagree about what are the most significant influence on the component of AMD, let's not forget AMD simply means aggregate monetary demand. It is widely accepted that governments have a crucial role to play in shaping AMD. Not only their sector but also the market side of the economy. Now, government policies on spending and taxation or an interest rate clearly have both direct and indirect influences on the behavior of individuals and firms, which can affect both demand and supply side of the economy in various ways. Basically, to me, not let's not even talk about capacity of spending of a consumer. Government has a huge. If government wants to reduce spending in an economy, it's just for them to increase inflation. When things are on the high side, everybody will retract from spending. Or when we have deflation, where there's no longer enough money in circulation, just like what we, although yeah, it does affect it. Like when there was no cash, when this no cash policy started, I think the level at which cash was available was brought down to minimum, to its barest minimum, and people refuse to spend money because especially cash. I know we have a system whereby sometimes you make transfer to you will not be able to confirm transfer, POS is not working. So cash was very scarce then. So government has a huge role to play in. I want to talk about economy. It's basically what the government decisions affect. It cuts across all borders. So now most governments appear to have a number of key economic objectives, the most important of which are normally the control of inflation, just like I said earlier on, the pursuit of economic growth, reduction in unemployment, and the achievement of an acceptable balance of payment situation, controlling public and government borrowing. So that's that for that. So government has a huge role in influencing the economy. Now, the economic conditions, now important economic conditions such as inflation, economic growth, unemployment, balance of payment are some of the economic factors in the economic environment that affect business organization operation. In what follows, okay, now economic conditions, now talking about inflation, economic growth, unemployment, balance of payments, these four things are serious economic conditions, and these factors has huge effect on business in a country. So, and these economic conditions are one, inflation, economic growth, unemployment, and balance of payments. So, speaking about inflation, now inflation is usually defined as the upward and the persistent movement in the general level of price over a given period of time. It can also be characterized as the fall in the value of money. Dash is the fall in the value of money, that is inflation. Dash is the consistent and the persistent and upward movement in general level of prices, also referred to as inflation. So we have that as that. So we have what is economic growth. Economic growth is an objective shared by governments and organizations alike. For government, the aim is usually to achieve steady and sustainable level of non-inflationary growth, preferably led by exports. Now, the export-led growth. Such growth is normally indicated by annual increase in real national income or gross domestic product. So we have the GDP, the economic annual output of the goods and services measured in monetary terms. Now, we have to compensate for changes in the size of population growth rates, and so basically economic growth is more of how much how much our GDP, which is the gross domestic product, has thrived in an economy for a given year. So we have exactly what constitutes desirable level of growth is difficult to say except in very broad terms. We have steady level of real growth. We have 3 to 4%, rather than annual increase in output, which vary widely over business cycle. Now, growth rates higher than those ones chief competitors and growth based on investment in technology. These are the yardstick for measuring growth in a country. So we have unemployment. In most democratic states, the goal of full employment is no longer part of the political agenda, as this can hardly be achieved. That's quite unfortunate. Instead, government pronouncements on employment tend to focus on job creation and maintenance and on developing the skills appreciate to future demands. The consensus seems to be that the technologically advanced market-based economies such on some unemployment are inevitable. You know, basically, unemployment these days, government no longer promise total employment, but rather they focus more on creating um, creating jobs and and training people to have marketable skills. When unemployment is reduced, is generating money in an economy, then the economy will definitely strive. So we have balance of payment. A country balance of payment is essentially the net balance of credit, which is the earnings, and debit, which is the payment, arising from the international trade over a given period of time. The balance of payment now, speaking about the country's balance of payment, the net balance, on earnings and the net balance on payments from what international trade over a given period of time. So we have where the credit exceeds debit, a balance of payment surplus exists. So when we have balance payment surplus, we have a situation whereby the credit exceeds, it exceeds debit. Credit in the sense that the earnings exceed how much they have spent, so there's a surplus there. So we have that as that. So we have controlling public borrowing. Government raise large amounts of revenue annually, mainly through taxation. So we can say the major source of government money comes from tax, and use this income to spend on wide variety of public goods and services. Where annual revenue exceed government spending, a budget surplus occur, and the excess is often used to repay past debt. So we can say the excess, which is the budget surplus from annual revenue, is used in paying past debt. So we have that as that. So we have the overriding concern over high level of public borrowing tends to focus on. Okay. I think that's it's not necessary. So we have what we call a stable exchange rate. Now, a country's currency has two values: an internal value and an external value. Internally, its value is expressed in terms of goods and services. It can buy, and hence it's affected by changes in domestic price. Externally, the value is expressed as an exchange rate, which governs how much another country currency it can purchase, like €1 for $2 or $1 for 140 naira. I don't know how they calculated this their rating. Maybe it was 2005 that they calculated their rating, because the dollar now, even by CBN, is about 400 naira now. Don't talk of the black market. So we have steady exchange rates, which we have internally and externally. Internally has to do with how much it can buy locally, and that is dependent on the price of commodities. And internationally, it's how much it equates to foreign currency. So we have so we have the excuse me. So we have the fiscal policy. Fiscal policy involves the use of changes in government spending and taxation to influence the level of the composition of aggregate demand in an economy, and given the amount involved. This clearly has important implications for business. Now, elementary circulation flow analysis suggests, yes, that's the black market rate. but for CBN, it's about 400 and something naira. So fiscal policy definitely involves the use of changes in government spending and taxation to influence the level of consumption of aggregate demand in a country, in an economy. How government influence the level of consumption of aggregate demand in an economy. That has to do with fiscal policy. Now, apart from the fact that it has impact on aggregate demand, fiscal changes can be used to achieve specific objectives. So there will be direct and indirect benefits on business community. Now, reduction on the company's profit or increase in tax allowance for investment in capital equipment can be used to encourage businesses to increase investment spending, hence boosting the income of firms producing industrial products and causes some additional spending on consumption. So basically, this has a lot to do with influencing the business environment, fiscal policy. So we have the monetary policy. Monetary policy seeks to influence monetary variables such as the money supply or rate of interest. Monetary policy has us to basically the circulation and the flow of money. How to control the circulation and flow of money. This government use you know money supply or rate of interest in order to regulate the economy. While this supply of money and interest rates are interrelated, it is convenient to consider them separately. So we have that as that. We have what we call direct controls. Fiscal and monetary policies currently represent the chief policy instruments used in modern market economies. Now, and hence they have been discussed in some details. Now, dash and dash policies are currently represent the chief policy instruments. Fiscal and monetary policy currently represent the chief policy instruments in modern market economic. Now, examples of policies include income policies, which seek to control inflation pressure by influencing the rate of which wages and salaries rise. Import control, which attempts to improve countries' balance of payment. So import control tends to improve countries' balance of payments. Regional and urban policies, which are aimed at elevating urban and regional problems. So we have rules of financial institutions. Now, interactions in the macroeconomy between government, businesses, and consumers take place within an institutional environment that includes large number of financial intermediaries. Now, the range of banks building. Okay, I think as part of the financial system within the market economic. Now, this is shall fulfill a virtual role challenging funds. Okay, I think it's a bit more of okay. Okay, definitely. Financial institution has so much role to play when it comes to the business environment. You know, I want to talk about banks and pension funds, insurance and investments, and issuing houses. All these provide numbers of services, both direct and indirect benefits to businesses. So we have element of the financial system. We have lenders and borrowers. We have financial institutions. There are intermediaries for borrowing money and lending money. We have financial markets. We have borrowing takes place through transfer of money and other types of assets, including paper assets such as shares and stock. So elements of financial system in business, we have the lenders and the borrowers, which may be individuals, organizations, or government. We have financial institutions, talk about intermediaries between lenders and borrowers, and which manage their own asset portfolio in the interest of their shareholder and depositors. So we have We have that as that. So very quickly, we are going to take the role of the central bank now. Critical element in a country's financial system is its central or state bank. Now, the Central Bank of Nigeria exercises overall supervision over the banking sector with the aim of maintaining a stable and efficient financial framework as part of its contribution. Now, let's take this. The critical element in a country's financial system is the responsibility of central or state bank. Now, the Central Bank of Nigeria now exercises overall supervision over the banking sectors, and this aim at maintaining a stable and efficient financial framework as part of its contribution to healthy economy. Its activities have a significant influence in the financial markets, especially the foreign exchange market and the money market. Now, the activities of the central bank include the following: one, bankers to the government, banker to the clearing banks, manager of the country's foreign reserves, manager to the national debt, manager of the issue of notes and coins, supervisors of the monetary sectors, and implementer of government monetary policies. So we have international economic institutions and organizations now. Given that, okay, for international and economic institutions and organizations, now we have what we refer to as foremost among international and international economic institution is what we call the European Union. That's the EU. In the discussion below now, we tend to focus on what we have IMF, which is international. Please take note of this because this comes out very much in the exam. Even economics to carry these questions. We have the international economic institution and organization. We have the EU, at the forefront. We have the IMF, which is the International Monetary Fund, and we have the OECD, Organization for Economic Cooperation and Development. We have the European Bank for Reconstruction and Development, that's the EBRD, European Bank for Reconstruction and Development, and we have WTO, the World Trade Organization, and we have the World Bank. So IMF basically, international organization currently of about 18 and 184 member countries. IMF is an international organization currently of 184 members countries. Now it came into being in 1946 following the discussion at Bretton Woods in the USA, which sought to agree a world financial order for the post-Second World War period that would avoid problems associated with worldwide depression in the interwar years. So take note of this. It came into being in the 1946 following the discussion at Bretton Woods in USA. So we have that. So one thing again I want us to take, there's something we call G8 countries. The G8, we have G8 countries, and these G8 countries referred to as 1. United States, 2. Japan, 3. Germany, 4. France, 5. Italy, 6. Canada, 7. Britain, and 8. Russia. These are the G8 countries, and they meet regularly, leading industrial economic to discuss issues of mutual interest. Now, the World Economic Summit, as they are frequently called, have tended to supersede discussion in the IMF as a result of normal attract greater media attack. So we have that as that. So we have Organization for Economic Cooperation and Development, that's the OECD. Now, the OECD came into being in 1961. Nigeria is not in the G8, sir. Mr. Julas. Nigeria is not in the G8, sir. We only have United States, Japan, Germany, France, Italy, Canada, Britain, and maybe I might be wrong. Maybe it has been recently added to G8, but as it holds now, they're not the G8 country. For I think it used to be G7. I think it was recently updated to G8. Now we have the OECD, which is the Organization for Economic Cooperation and Development. Now the OECD came into being in 1961, but its roots go back to 1948 when the Organization for European Economic, that's OECD, was established to coordinate the distribution of Marshall aid in war-torn economies of Western Europe. Now, OECD now has about 30 members drawn from the rich industrial country, including the G7 nations. So as we have the G8, we have the G7. Now G7, we have Australia, we have New Zealand, we have, and the rest are European states. Now we have collectively, I think that will be our assignments. We should just list out our assignment for now is going to be list out the G7 nations. We already have Australia and the New Zealand, so the remaining 5, let's list them out. That's going to be our assignment for today. So we have on this live stream, Mr. Julius has been very active. G8, they are actually nations. They are powerful world nations that come together to form a member of a team. And this member of a team is called the IMF. They are basically the founder of IMF, and over time, they have other members in other countries. I think they have about 104 member countries, but the sole responsibility of the IMF is on the G8 nations. It's all about each country is coming together to discuss how to improve national, global economic, and how each country can bring resources to further assist in security, in business, finance, and so on and so forth. We have the G8 nation, we have the G7 nation. So the assignment now is to get the G7 nations. We already have New Zealand and Australia, so the remaining 5, we have to get them listed. So we have the EBRD, the European Bank of Reconstruction and Development. Now the aim of EBRD, which was inaugurated in April 1991, are to facilitate the transformation of the states of Central and Eastern Europe and beyond from central plan to free market. Now if you look at all this all this we have been mentioning, from IMF, from EBRD, and basically they are all about one goal: how to improve global economy at large. So this EBRD now was inaugurated in April 1991, and it works in cooperation with the members, private companies and organizations such as IMF, OECD, the World Bank, and the United States. So that's it for that. Yes, IMF, the G8 has a lot of influence in forming the IMF. Yes, Mr. Julius. So we have the World Trade Organization. The World Trade Organization, which is WTO, came up into being in 1st January 1995, superseded by the General Agreement on Tariff and Trade, which is GATT, which dated back to 1947. So like the IMF and International Bank of Reconciliation and Development, which were established at the same time, GATT was part of the attempt. So GATT now superseded WTO. WTO was created in 1st January 1995, and superseded the general agreement. So now WTO came after GATT has existed. So GATT was in existence in 1947 and WTO came in 1951. And GATT is General Agreement on Tariffs and Trade. So we have it has about 150 states laws. Okay, 150 states. You know? So we have that for WTO. So we have the IBRD, which is the World Bank. The World Bank. Now, the World Bank established in 1945. The World Bank, more formally known as International Bank of Reconciliation and Development. So when you see IBRD, which is International Bank for Reconstruction and Development, it's the same thing as World Bank. It's a specialized agency of the United Nations set up to encourage economic growth in developing countries through the provision of loans and technical assistance. So it currently has about 180 members. So we have the EIB. Now the EIB is excuse me. So the EIB, the European Investment Bank, was created in the year 1958 under the Treaty of Rome, and is the financing institution of the European Union. The European Investment Bank was created in 1958 under the Treaty of Rome and is the financial institution of the European Union. The main task is to contribute to integration, balanced development, and the economic and social cohesion of EU members using funds raised on the market. So we have a conclusion. Economic factors affect the ability of business to meet its objective. Definitely. Business prosper during good economic condition, while poor economic condition hinder their activity. The nature of economic system adopted, the quality of monetary and fiscal policies, and the support of international agencies affect growth and development of business organizations. So we have that as that. So we can just move on to unit 2 now. You have technological forces. So looking at the meaning of technology and investment, research and development. So we have what is technology? Technology is defined as the sum of knowledge of the means and method of producing goods and services, according to Penguin Dictionary of Economics. Now, it is increasingly science-based and okay, sorry about that. I think that from the network service provider. I think we are live now. Now, we have technological changes leads to the introduction of new products, changes in the method and organization of production, and changes in the quality of resources and products. New ways of distributing the product and new ways of storing and disseminating information. The technology has a very big impact upon world of business in all of these areas and has an impact effect on levels and types of investment. Now, impact effect on levels and types of investment. Now, we have technological changes. So we have technological changes. So we have information technology. Development in information technology has affected. If we want to talk about information technology, we have transforming existing business activities. Okay, we have collecting, handling, analysis, and transmission of information. Availability. So we have advances in information technology have many impacts upon business. They are creating new products and making old products more profitable to produce through things like computer aided design. That's CAD, computer aided design. And this effect has to do with administration, communication, production, storage, and distribution. So we have other technological developments. We have new materials, we have biotechnology, and biotechnology exists, have wide-ranging effect on how many fields. The development of new products like computer can imitate the activity of brain, can shorten the development period of certain products, in speeding up. Basically, it just has to do with how to improve business productivity and efficiency. So we have that. So we have innovation and technology. There are two types of innovation that can occur as a result of technological changes. One, product innovation and process innovation. Talking about product innovation now, it is the development of new products like the microprocessor, which will have far-reaching effect on business. New products impact upon industrial structure of a country. As a new industry, when you have in turns, it leads to changes in occupational structure of the workforce, and definitely boost the productivity of the organization. So then let's take for example another example of product innovation which has affected the level of competition in the market is the development of quartz watches. Now, which allowed Japan to enter the market and compete with Switzerland. Process innovation, on the other hand, refer to changes just like this vehicle Tesla is doing now. Is powered by electricity. I think if it continues and it gets batteries that can last longer, for days, definitely people will start going for his vehicles. If the battery of your vehicle can last maybe for 1 week, maybe after charging of maybe 5 hours, and you can even do 5 hours overnight when you are sleeping, park your vehicle in the garage and it's charging. Before you know it now, these vehicles will be everywhere in the world. That is what technological advances can do to products. So we have that as that. So that we call research and development. Now, most but not all technological changes have occurred through the process of research and development, which is R&D. Research can be theoretical or applied. And development refers to the using of research in the production process. Now, most development carried out by private companies is directed towards applied research and development. Now, it is designed to develop new products. Talking about applied and research development now, it is particular about developing new products and production process which will render production more profitable. It's aimed at improving existing products and processes. Research and development is aimed at improving existing products and processes. So we have the limit of technological change. Technological change has many effects on the economic and environment, and it's uncontrolled and if uncontrolled can lead to problems like high levels of unemployment, exhaustions of natural resources. If it's not controlled or properly managed, it can lead to high level of unemployment when we have machines doing everything and resources to keep them running as well. So we have now the conclusion says here the ability of a business to survive is directly tied to the quality of technology available and developed and deployed by a particular business. Efficient technology results in the lower cost and higher product quality. Now, business must keep in touch with development in the technological environment to ensure that current and obsolete technologies are used. So we have that as that. So we have demographic factors. So when we talk about demographic factors, the study of population both in terms of their overall size, and their structural characteristics. So now, business point of view, is interest including age structure, given population, the gender balance, and all these things will talk about how they affect businesses. Now, the population of a country normally increases over time and will vary according to such factors as changes in the birth and death rates, of the net effect. Okay, talking about population definitely just has to do about you know certain amount of people living in a particular place, definite territory. So we have okay, let's take this very quickly. Now, Nigerian population as at 2015 is estimated to be 170 million people. In comparison, Russia current population is around 140 million people. 145 million, you know, millions is projected to fall about 100 million by 2050. As a result of declining birth rates and rising death rate in the wake of the country's economic collapse. Now, talking about Russia now, talking about Nigeria. Out of 2015, we have about 70 million people in Nigeria, and Russia has about 145. Now, projected researchers project that by 2050, Russia population will have dropped by 100 million. Why? Because they are no longer giving birth like before, and people that have been given birth to, they are dying without replacement. So if the population has reduced, definitely it will affect business. It will affect business definitely. So we have the age and the sex distribution of population now. In addition to this overall size of the country's population, demographers are also interested in structural characteristics including balance between males and females now. So we have overall characteristics. Population can be examined by a number of other ways, including their ethnicity and geographical distribution. Now we have population change. Population change can be either the size or the structure, consequence of economic activity both within the economic country. So we have the birth rate. Okay, all this basically they are not I think they are not that necessary. So under population change, population structural characteristics of population, we have the population change. So we have the birth rate, we have death rate, we have net migration, movement of population within the country. What that stands for. We have demographic change in business. So as the population grows in size, the demand for many types of goods and services also tend to grow. Definitely. The way things are going now, it's all about the game of numbers. And even online, you have to gather a community before you can make anything tangible. So basically, to business, you have to have returning, you have to have your targeted audience that knows that you're an authority in that field. So we have basically we have that is that. So we have so we have what we have here, the cultural environment. The population environment basically talks about the size, how it affects the changes in size, and your targeted audience. So we have what we call the meaning of culture here, cultural environment. So we have talking about culture. In terms of culture, generally, is referred to as complex set of values, norms, belief, attitude, custom, system, and artifacts which are handed down from generation to generation through the process of socialization and which influence how individuals see the world. Basically, culture is values. We want to talk about values, talk about norms, talk about beliefs, talk about attitudes, talk about customs, handed over from one generation to generation to teach them how to live, to know their ancestors, to expect what is expected of them. All these things are said to be culture. Now, culture can be seen to have these three important features. One, comprises both material and abstract elements. Material in the sense that we have human artifacts, literature, art, music. Talking about abstract elements, now we have ritual symbols and values. Now we have the second, which is the social learned and transmitted over time. Socially learned behavior, and we have influences, human behavior. So we have the material and abstract, socially learned. We have the influence, human behavior. The concept of culture is applied in a variety of circumstances at both the macro and micro level. We have Western culture, we have Asian culture. So definitely know things that sells. I think TikTok now is not even in China. It's not, if I'm not mistaken, TikTok is not in China. You know, so there are some stuff that will sell in Nigeria. If you try it abroad, it won't sell. So it's basically because of their culture and things like that. So we have what we call subculture. Society is really if every culturally homogeneous. Okay, now within every culture, subcultures usually exist, comprising groups of individuals with shared values based on common experience. Even in Nigeria here, even in a place whereby they practice one culture, they see what we call subculture, whereby there's a sect, small group of people that believe that okay, this is what we do it, this is how we do it. So and these small groups or the subgroups are distinguished by nationality, race, ethnicity, religion, age class, all these things take set them aside. Mm-hmm. Speaks more about cultural diversity. So now UK provide a good example of the notion of cultural diversity and can be used to illustrate how this can influence the demand of goods and services. Now, in addition to nationality, groups such as Irish, Scots, Welsh country has provided a home for successive generation of immigrants around the globe. So we have that is that. So a lot of stories here. This material is quite full of stories. I'm just trying to get the point. So we can move on and we can we still have past questions. We still have some questions and answers to treat. So we have let's take down this acronym. It's called ACORN. ACORN. So ACORN is said to be it's an acronym for a classification of residential neighbors. That's what ACORN means. ACORN. A classification of residential neighborhoods. 40. It has 40 variables. Okay. So we also have what we call we also have mosaic here, but I can't see what it means. Let's just quickly check that. Mosaic. It's an acronym for what? Okay. I think the material did not really specify that, and I didn't get to see that when I was okay. Just a moment. So we have the ACON, which is a classification of residential neighborhood. So I'm just quickly trying to check what this mosaic is. Okay. okay, I'm not getting what I want here, but I think in our next class I'll have to explain what that is to us. But according to what we have here, the material it has to do with developed by Experian, which draws a variety of data. It has to do with data, classification of data and analyzing data. So we have um, so we have that is that. So now one established and popular example of you have lifestyle segments can develop either off the shelf product of marketing consultants, although it often tends to we have what we call VALs, which are values and lifestyle. Values and lifestyle they are referred to as VALs. So we have all organizations are an integral part of society in which they exist and carry out their activities, and that's as a result they are affected by a range of influences emanating from demographic, social and cultural environment. These influences can change over time. So definitely the environment has a lot of influence on the business. So we have out of that. So we have environmental analysis. Meaning of environmental analysis techniques for scanning the environment. So we have what exactly environmental analysis and scanning means. Managers need to understand how the environment affects their organizations and how should be you know, how how do you identify opportunities and threats that are likely to influence their organization performance. However, you know, talking about the environmental analysis now, the managers need to understand the environmental factors that can affect the organization, the threats and the opportunities. So speaking of which now, information about the environment is not always readily available for managers. Managers often find it difficult to predict about the environment due to uncertainty. So environmental analysis now is scanning of the environment to identify changes or trends that have the potential to generate opportunity and threat to the organization's you know time whereby analyze and scan environment in order to identify changes or trends that can have potential to generate opportunities and threats to the organization. That's what basically organization environmental analysis and scanning means. So we have three types of environmental scanning. We have the irregular scanning system, which has to do largely with hardcore environmental study and in-depth study of the environment. They emphasize short-run reaction, crisis, little attention to future environmental events. Now we have the regular scanning system. This one, the regular car scanning system revolve around the regular review of environment, the significant environmental components. It's basically more of retrospective, past, but give future conditions. At least it's still better than the regular one that does not even give any future condition. But the regular scanning gives future condition even though it works on the past. So we have continuous scanning system. Continuous scanning system here is a common of organization environments or constant, or you constantly monitor the environment. So the three environmental scanning are irregular scanning system, and continuous scanning system. So when managers want to scan an environment, these are the regular questions they ask. Who are our current competitors? Are there few or many entry barriers to our industry? What substitutes exist for our product or services? Is the company too dependent on powerful suppliers? So we have techniques for analyzing business environments. Many techniques are available to organizations for the analysis of the business environment. Some of these techniques which are discussed below include scenario development, forecasting, benchmarking, trade exploitation, export opinion, cross impact matrices. We have the SWOT and we have the TOS. So now talking about techniques for analyzing business environments, which is one, we have scenario planning. When organizations try to determine the effect of an environment forces on their operation. Scenario planning is the formulation of multiple forecasts of what the future looks like. Multiple forecasts of what the future holds. That's what scenario planning. So we have forecasting. Another method used by analyzing the environment is forecasting is the process of predicting. When we have scenario planning, it's more of the formulation of multiple forecasts. But when we have forecasting now, it's more of predicting what will happen in the future based on what you are seeing now. So we have SWOT. SWOT stands for weakness, I beg your pardon, strength, weakness, opportunity and threat. So okay, so we have so these are factors within the business environment, which is organization operate now. SWOT analysis is a systematic definition of this factor, reflect the combination of these factors. The best practice to efficiently maximize firm strength and opportunity at the same time, maximizing the weakness strength. This framework can be designed an effective strategy now. SWOT analysis reviews its internal strength and weakness. The management, external consultant help provide a more objective view. SWOT analysis really helps a lot. Company tend to know what their weakness, their strength, their weakness, opportunity, and threat is or are. So we have benchmarking. It's another tool in which a firm can use to analyze its environment. It is a process in which the organization undertakes to compare its practices and technology with those ones of other organizations. So when they compare and contrast benchmarking with other organizations, what they do with other organizations. Excuse you. So we have limitations of environmental analysis. Environmental analysis produce procedure described above. The impact of dynamic changes on business. Dynamic business, a lot of changes, unexpected or predetermined changes happens here and there, and it affects the organization. So environmental analysis is also useful in decision making. However, some limitations is to start with, analyzing a business environment is not exact science and does not eliminate uncertainty. So availability of information is one of the limits, because when you are starting, you need to gather information and you need that information to now make your conclusion. Now, the dynamic nature of business requires the manager to scan and monitor it. Scanning is not enough. There has to be a continuous monitoring. Environmental analysis is required to identify changes or trends which have the capacity of influencing the business positively or negatively. Now, techniques such as scenario planning, forecasting, SWOT analysis, and benchmarking is viable tool for environmental analysis. So we have that as that. Now, environmental analysis entails scanning and business environment to obtain information that might be useful to an organization in its operation. Now, doing this, organization can use scenario planning, which is a narrative that describes a particular set of future conditions. For scenario planning, future condition. While forecasting is another method that an organization can use, analyze the environment. It predicts the future outcome using some variables. Why SWOT analysis now is the popular method used by organization to determine the strength and weakness and to detect opportunities and the threats that are inherent in the environment. So organization can as well use benchmark when they try to predict changes in an organization. And the method enables the firm to undertake intensive study of the best practices, which firm to understand their competition advantage and take advantage of the competition. So we have environmental analysis as its limitation as well. Manager therefore should be very careful while undertaking environmental scanning. I think this brings us to the end of the course. It's been a journey so far. So we are done with the course ENT 101. I think this took us about 3 days to go through, 3 classes to go through, and this brings us to the end of the class. So thank you very much, guys. The assignment is let's the G7 countries. We have New Zealand and we have Australia mentioned. The remaining 5, let's go out to make our research and submit this. Thank you very much, everyone. Thank you for sticking around to the end of. I think today is matriculation. It was a big day. It was fun at a lot of study centers today when a lot of students are matriculated. So thank you very much, and I look forward to seeing you all in the next tutorial. Bye bye.